What is going on, everyone? Welcome. It is Trading Trends with John Salama, CMT, with Rocco, the returning all-time high dog here. New all-time highs in the market. You name it, we'll get into it. What a day. What a day. Sung by a pretty decent band called Nonpoint, I think. But what a day. Let's get into it. A lot going on. New all-time highs. We had been calling it out. I think it was a week and a half ago or so. I said, just looking at the chart, looks like the S&P is getting ready to jump about 3% in the next 2 to 3 weeks for new all-time highs in mid-March, likely before. And today is August the 4th. Let's get into it. What's pushing this right here, right now? Software. We're talking about on Friday's video or the end of last week. Thursday or Friday, we were saying, can't believe I'm saying this, but IGV has a little bit more to go before it gets exhausted. Guess who's leading the move today? Largely software. We'll take a look again at the IGV in focus. Tech, a massive move. You'll take a look at some of the individual subsectors, and Midcaps also getting a big bid, while nat gas, new all-time lows in that ETF. Oil, a big collapse today, as the Hormuz deal looks like Besson said is going to happen. Whatever he said, she said. Every day it's a new thing. All I know is new all-time lows in VXX as well, plus UNG, and new all-time highs for SPY. This market doesn't care about anything. We alluded to that last week about XLF, the financials going higher, and we said you don't invest in banks if you have real kind of concerns about the economy, even the market digesting the rate picture going forward with one hike, most likely in between here and Christmas. So, and then we go into this, a little bit of a headline here: new all-time highs for SPY, the aforementioned financial, RSP, which is the average S&P 500 stock, so they're all enjoying it. Dow, which you're getting confirmation of the breadth through industrials, and IFA, Europe is participating. Australia, massive bid as well today, a 2.5 sigma move for Australia. So let's get into it. A lot to cover here. If you're long, you're probably enjoying a lot of these gains here. This market, very hated rally. To me, it looks like it's going higher. Again, when we just chart, we stay on the right side here. This is what the S&P looked like. Let's take a look. Q's leading the pack here. We talked about the aforementioned software, 3% run up for Q's. Absolutely massive move. We've been talking about, here's S&P up 1.7, Micron up 8%. We said the violence almost. You wake up one day, the semis, they're in love with it. The next day, they're not, so on and so forth. But they gather more velocity to the upside than the down because of the buyers stepping in. Micron up 8 today. Monster day. Palantir up nearly 1/3% of the value of company in earnings reaction to that. I think they said they have unbelievable or otherworldly, I think was their word, of demand. So Palantir up 29% here live. Microsoft enjoying the day up 1.5%. NVIDIA up 2%. Just back to that 210 mark. Amazon down 1.8%, but this company had a massive move on, I believe it was Thursday, up 14%. So 2% give back today. AMD, a monster move, up 8%. Apple up 2%. Intel up 10%. So the White House is loving that. Google 1%. SpaceX up 6% after hitting all-time lows yesterday. All-time as in 2 months since it's been public. Tesla up 1%. Broadcom up 6%. So they're loving, obviously, semis today. For the most part, Meta down 1%, Marvell up 14%. These are monster companies. Oracle getting off the mat up 4%. The SOXX ETF up 7%. Monster. All right, so as I said here, just technical breakout. Almost always, when you have a breakout from a former area here mixed with an overbought registration, it's just telling you there is a lot of hubbub going on in the line. They're excited. The buyers are going to buy first and ask questions later. And you always want to zoom in at 9:30 when liquidity enters the room, and that was really doubling down there. Got above a short-term VWAP. This is intraday VWAP, each bar here constituting 30 minutes with a massive overbought registration here at 9:30 a.m. And we're actually above volume, above average volume today by about 10% in the SPY. So this is not just a regular, Tuesday doldrum. Summer trading. This is they're stepping in here, and look at all this green bars all day. Yes, slightly lowering volume, but still pretty heavy for at least pretty decent volume for each bar. And right now, I believe VWAP is going up by about 10 cents. Still there at 766. So meaning we could have a $6 drop, nearly inside of 1%, would be up 80 bips on the day, and still a healthy trend. This would reset to about, maybe like an 80, 75 RSI. So that could potentially happen. I'm talking at 1 o'clock afternoon, but absolutely massive day. You're getting confirmation as well for, with new all-time lows through VXX. Let me zoom out here. This is really important. So we were talked about before. This is just straight up mathematics. Let me put a lot. I'll move this box out of the way here. We were looking at cycle work as usual. Why I had said was all-time highs on or around mid August was because we had the bearish distribution phase ending on July 30th. We said here, I like what's happening in the market. As long as you hold 725, this looks still strong to me. And overall, what I've been seeing, and we've been talking about this from July, is a long rectangle here. Kind of reminded me of gold last year, and then it broke out. This has been doing a whole lot of nothing. And look, it gives above the 50 RSI neutrality point to about 62, and it goes below by about 43. So 7 to the downside, 12 to the upside. A little bit more excited to the upside than to the downside. Obviously, with a trend like that, with a 200-day rising, losing a little bit of slope, but still serving as your ultimate support here at 700 even, which is our ultimate breaking level. We tried to do all that price discovery in the beginning of the year. The war threw us off track. And then, of course, everything changed when Trump announced the ceasefire in early April. And now what I don't like to see just for the moment, so a couple things, candlestick patterns versus like straight up indicators. So we've been green every single day since the 24th, by the way, just so you know, minus that one give back we had of 1.5% on the 29th. Look at this also. You're not getting a confirmation with RSI. Typically, I want to see at least overbought registration, which is 70. You're getting 66 here and all-time high. So something could give in the terms of that you can have a quick, easy fall just due to the the buoyancy of this. It looks like it could be a little bit thin underneath. That could provide a fallback, and it would still be healthy going back to about the 745 area, believe it or not. So that is just something that's pointing out there. But I want to say something else, that what's giving me with the evidence approach, this breakout is massive. The former all-time highs was struck June 2nd, if you remember, just a little bit after Memorial Day at 760. I had said I thought this was going to be a double top, almost an appearance of a double top. We would get to 760 to maybe 763, and then we would fall. And folks would say, oh, there it was. Instead, what it looks like we're getting here, and this is just as of today because of what, the news of Besant and from Besant and about the deal with Iran potentially happening. We have broken above that 760 by the tune of about 11 points. And view up on the day is 767. They're saying mine by $4. They're hitting, we just hit it 10 cents ago. So we're hitting all-time highs right here, right now as we speak, and they're coming for other areas. And now what do we see going forward? So this is basically what we said. I love the breakout. When you have a long, don't forget, we were having this, today's August 4th. This rectangle started June 2nd. So you have 8 weeks of energy doing nothing where you were ping-ponging back and forth, 760, 720, something like that, so some 755. And then technically another thing I like to see was higher lows here. Here you hit 726. Here you had an ugly freak out day all the way down to 717. God bless you if you bought on June 26th during that craziness. And then right there, we didn't believe it had the oomph to take out 760. We had recommended selling strangles as vol continues to come in. And then right when we said if S&Ps hold 725 throughout the end of July, this thing's very likely going higher. The bearish distribution ending right there the next day on the 30th. Hence why we said the 15th for on or around all-time highs likely before, because momentum still runs the market. So as I said before, now what do we see? Just up to the sec here, what I'm looking at, still around my peak. It was very, again, the 767, the way it went right through today, and it exactly is where our VWAP is very important to me. I think we're getting going here. It's going to sound a little bit confusing, but 770 is my target, yes, which is where we are here. The candles look absolutely amazing. The buyers truly stepped in on the 30th at 735, and they've not stopped. Look at the indecision on the 31st. View up was 745. The high was 748. It closed that day at 747. They've not stopped. When you got JP Morgan making all-time highs, Apple, different parts of the economy, IGV is getting a big, which drives a massive part of tech confidence. And this long rectangle is finally now breaking as of today, August 4th. A lookout. I think we have another 10 days or so. I'm not calling for, like 780 and 800 right here, right now. You could actually do a measured move in that it was 760 to down to about 720, 40 points. You could get about, half of that from the breakout, which would be a target of 780 with momentum. Like I said, I see the bullish accumulation phase for this round ending on or around the 15th, which is the end of next week. So I think, and the candles right here, the patterns telling me we're not done. This is up 1.8. I got to see this up 90 bips, up 40, up 20, and then flatten out. The market's getting exhausted. Right here, this is that that runner on the road saying Bitcoin sellers are not getting tired. This thing is just 4 days in, so it's going to get going. All right, that was my 10-minute prelude here. Let's get into it and get right into what they're really lifting the markets. And we got to begin nowhere with software, an area I've called for the death for, but I'm a chartist absolutely first and foremost. And I said, look out. I need at least more sessions than it did before above the 200-day. Typically, I look for at least 5 for something combined with overbought readings, technical indicators, internals, with candle formations. Right here, you gotta love what you're seeing out of software. It's trying to come for those June 1st highs. The last time it was overbought and had 3 days above 200-day moving average. What you're hoping for is what we saw in K-Web when Chinese internet stocks led the week last week with a monster rally, meaning that old resistance for K-Web, which still has so much more work to do, you want to see that old resistance become support as a la seen visualized through the 200-day moving average. You ideally hope, and look how the buyer stepped in here at $88 on the 24th. This rally has been about a week and a half now for software at $88 all the way to 101. I believe we had suggested if you were a gambling man, I said if you're investing buying the August, I think it was something like the August 99 call, something like that, and those would have done obviously very, very well. Now looking back at the chart, the 200-day moving average is still going lower. You hope for that to base and stabilize at 94.5 to provide some support. IGV, don't forget, this is getting a little bit long in the tooth. I love what I'm seeing here from the candles, though. Obviously, the next area of contention is 108, $7 more to go. I think this has a couple more days to go. This is up a robust 4.3% today. Like I said, I need to see this up, 2%, and then a 1%, and then a 0.5%, and then the digestion day of flat, and then I'll know it's getting tired. But this looks to me, so this is our first, chart of the day outside of the SPYs. This may be an area if you want to sell, you need some credit. The August 94 puts, I think they'll pay you handsomely. Buy the 93s against it. That is a decent trade. RSI overbought for the first time since the peak. Look out. Sometimes it ends this way on June 1st. It was up 6% day. The next day was down 3. Life comes at it fast. You wake up on the wrong side of the bed with software. Down 4. Look at Cascade. It went all the way lower June 1st all the way to June 25th. 3.5 weeks straight down. So a very important area where it's going. I think it's going a little bit higher. I think it wants to contend, as I said, with this price discovery level of at least 103 towards the 108 area. It's a little bit long in the tooth, like I said. If you still want to go into those, now I would probably go maybe November's 108 calls again and sell something against it like the August 108s to help subsidize the trade. They're loving software today, leading the rally today in tech. Let's go right to tech. A monster day. We only talk about things that are 2 sigma moves or above on this program, which is why you get featured. And look at this. Tech peaked with the market the day after, 24 days after the SPY. It was at 199 essentially in XLK, and it had a pretty heavy hit all the way to 166 just last week, and boom, the buyers stepped in. This candle looks great. This looks like, to me, this is a great looking reversal buy, and this wants to be headed towards 192 right here. That lines up with the highs the day after its all-time highs. Candle looks great, though. It might have enough thrust to go to 192, which is, excuse me, $5 away, or just about 2% or so from this point. Candles look great. Looks like the buyers might get tired, as I said, at 192 trades. These are going to be expensive. This is a nearly $200 ETF. I think you could go out and buy those Novembers. 192 calls going to be expensive. Sell the August 192s against it. Alternatively, for a credit strategy, I think you could sell the 175 August puts buy, the 174s against it so you can sleep at night. Tech looks like it's going higher. Typically when it does, the market enjoys it. And this is not straight up tech, and they're gobbling this up today. The IWR, I don't think we ever featured this specific ETF on this show. Rocco wants to exit stage left. I'll have you digest that chart right there. That is the Russell Midcaps, which is not strong overlay with the tech sector. Bye, Rocco. He's always more of a beta chaser. He's a mega cap guy. He's a bit of the mags and plus Pet Smart and Chewy. Poor guy. He's doing all right. His portfolio's looking decent. So the mid caps bottomed basically Thanksgiving week at $92. This is a lower vol group. As you can see here from the ATR, $1 on $112. This is a lower vol group of a mid cap blend here run by Ishares. The money flow has been horrendous since June 24. What I mean by that is essentially on the close at important 3 to 4 o'clock hour in the East Coast. Look at the candles. They go to highs and they rarely close near them. Instead, they close towards the bottom. And that trend has been in place since June 24th, ironically, within 2 weeks of its highs, essentially. And now it just broke forth to new highs. They're loving this here. You're also getting not a confirmation here. It's a 67 RSI. This to me at target is right around 113. It is at the door. These candles look phenomenal. We'll see how they close. Like I said, it's had a weak track record in terms of high closes, but a great looking chart. Only, 3 closes under the 200-day moving average. So great looking. And look at this. Almost last time it was under 48 RSI was a pre-ceasefire. So just a strong group. Loving the mid caps. In terms of trades, I think this has a couple more days. Tops maybe a 114. This one's tough. You're not going to find a ton of optional liquidity either, but I would like to sell, if possible, the 110 August puts, buy the 109s against it. Again, this is a low ATR, average true range ETF, so you're not going to get paid handsomely. Alternatively, if you believe in the trend in this, and I think it looks good, you would buy the November 113 calls. This one doesn't move a ton. They're loving it today, though, hence why we're talking about it. Up 1.5%, monster move for the mid-caps. Let's look at the losers. You can't just buy everything. Sometimes you have to liquidate, and oh my goodness, nat gas, new all-time lows. I said you were going to see that 9 handle again, and new all-time lows. Here's someone that's full of natural gas. It's Rocco. He's going to return the dumb idiot, but I love it. You were natural gas and you want to participate? He's spinning. Natural gas, this is phenomenal. Down 3.5% today to new all-time lows, UNG. We had hoped for this, or not hoped, but it looked like this was trying to stabilize somewhere with that 9 handle again. And boy, alternatively, like we said, you're not getting confirmation in the S&P, 67 RSIs. Look at this. You get all-time lows in UNG, and you can't even get under 30 or 33. So pretty interesting there. Divergence is what they call it. And this was up each day since the 29th. It's very pathetic, the rallies in nat gas. Now what? I wouldn't do any trades for this. This is just observation. Because it's nat gas and we're in a world, literally global bull market. I'm just doing this because it is making all-time lows in ETF land. So we have to pay attention to it. This is going to it's going to be pathetic, rally to 10.5 in the next couple of weeks, and that's where it's going to fail. It's pathetic. You can sell at 10.5 calls. I doubt they're liquid and even gives much on the bone. Alternatively, I mean, you're probably looking at an 8 handle in the face in the coming months for this. So pathetic nat gas. Let's not spend any more time on it. This is much more important. USO oil down 5%, 5.1% right here. We had said, stay out of this. They're going to be gobbling beta, which is literally what's exactly been going on. And the day we had said that, this rejection, I said, this is not ready for the prime time yet again on July 23rd. Roughly a 15-day cycle, takes to about August 8th. I said I don't want to really look at this till then. Then it'll be a decent commodity, a decent asset to own. We are approaching it. I don't want to own it here. These are ugly-looking candles. I do believe the buyers will step in once again with a floor of potentially 108 right here. So that would even be inside of those early July 4 lows. That was 102. It's potentially they get to that, and you still support at 101. So I still like the story. Again, if we wake up and the war is over, not a ceasefire, not a 3-month hold, over, yeah, this thing could, gap down to 99. But right here, I still like it overall. I think the market's telling you the same thing after it stabilizes. So give this a couple of more days. If you want to get this at 103, I love it. I still think this is not a bad looking chart. Don't forget oil peaked May 18th, USO at 154. Still a stupendous looking chart. I just don't want to buy it right here as they're gobbling up beta. We said what we want to get into: software, tech, midcaps, other things. Oil, not just yet. And then the next thing that they're hammering here, utilities. That's a pretty decent, strong move lower for 60 bips lower. But look at that, the hammer that came in. They shot this all the way lower to the floor today of 43.60. View up is 44.04, and they got above that, and that's when you get a candle that looks just like that. This whole AI trade needs also utilities to help run, and it's very tough to trade publicly traded utilities. So a lot of people have to go straight through the ETFs. This is a little bit difficult. So we said before, utility is not the worst place you can be, but then May, specifically the end of May happened, where it just started to put in these lows towards $43. Again, this is super low ATR. This is a $44 stock with 75-cent ATR, meaning it moves 75 cents top to bottom essentially all day, and the thing's $44. So this isn't if you trade GameStop or NVIDIA. And then what happened was ugly here on the 24th, similar to the rejection that oil got. Utilities also got at 46.63. The flow has been horrible in terms of money flow all the way since mid-May. Honestly, that's how you get candles like that. Very few green ones after that move. As I said, in mid to late June, a lot of red in utilities. With a floor here, we suggested selling strangles. Now what? Whew, I gotta take a breath when I do these things. I look for this to stabilize at a 43 handle. When I see hammers like this, it looks like they've done it, but you're still down 60 bips, which the last I checked is around a 1 sigma move for utilities. I do potentially think they stuck the floor with a higher low. The 200-day also does give me concern, though. Conversely, now it's going down by about a cent a day, which is a little bit concerning. It's getting its butt kicked by SPY since May. So mixed signals. Look for this one to go lower potentially with a 43 floor. And then I think the best it's going to get is a rally towards the 45 to 46 area. Essentially more frustration. When you go and trapeze the 200-day that is now going lower by a penny or essentially flat, you go above it, below it, above it, below it. That's very frustrating if you're long the underlying asset. So utilities frustration. The call is probably sell more strangles, but it's in the low ATR stock, so it's not going to play. But if you really are tempted by that, you sell the 47s, 43s. But I doubt it pays. Do that every 21 days as you roll theta out. All right. Let's look at the biggest gainers the past 5 days. I got to drink a little water. A Sixers cup, which LeBron is. He's not a Sixers cup. He's a Sixer. Number one, we had talked about this, and we said, is it the death of South Korea? I said, probably not. When you have high margin craziness, the rubber band goes both ways. I said, if it's going to step in, it's got to do it really, really soon. Guess what's the number one performing ETF in the past 5 days? The trend is his friend here, EWY, up 12%. Or more than 2% a day. Today, up a robust 6.5%. Look at when we said that, July 29th. The 200-day moving average, this is the tightest it's got. The most you've got South Korea on sale, I think, since the 52-week low last August. And honestly, on the 29th last week, it was more of a discount, okay? Because it got, I'll take view up. I don't want to be, cute and take the low. The low was 143. View up was 147. The 200-day moving average is 136, so 11 points inside of 10%. It's very difficult to get that on a straight DRAM South Korea play like which involves Samsung and Hynix, 40% of this basket. It stepped in right there right now. It has still been getting its butt kicked from by SPY in the last 2 weeks or so, but it's gathering strength here. What I want to see, okay, is that it stuck the landing at 145. It went much further lower than I had hoped, but still respectable. The 200-day moving average is now going up by about 40 cents a day, so obviously has lost velocity, which is what happens when your high has been put in 6 weeks ago. Candles look good here. Today, a monster one. They're not, they're still hungry here. So where does it head? I think it still has, it looks like to me, weight of the evidence, it still has several more days of bullishness, a la like the same you're seeing in the overall market. The way it took 168 today, volume or a VWAP is 168. Today it's 171. It just hit a high of day right here, right now. This one looks like it is headed towards 182 in the coming days. That would be another $11, and then I think it's possible, very likely, it gets tired. But I only know that combined with the indicators, with more importantly, the trading above VWAP. You're just getting above 50 RSI in South Korea since the week of its all-time high. So now I want to see the buyer step in. It's up 6%. Tomorrow, if it's up 3%, that's still overall healthy. The day after, up 1.5%. Okay, now we're starting to see a little bit of the buying exhaustion. And I think this thing's probably going to top out short term at about the 182 mark. And that will very likely coincide with those RSI levels where it peaked before, right around the low 60s. So trades, I mean, this is going to be super expensive, subsidized trade, of course, but you could do November target. So November 182, closest thing listed to that strike, and you sell the August 182s against it. Alternatively, you could sell the 145 puts in August by 144s, whatever the next strike lower against it. All right, South Korea, the year-over-year leader, stepped in right where it had to. Like what I'm seeing, this could be putting in a crazy long-term rectangle from 220 to 145. They can always exist, and then the breakout is when it breaks through. So that's possible, and that sometimes corresponds with this movement when buying power dies at the 50, not the 50-yard line, which is the way I see it, but 50 RSI. EWI, the greatest ETF gainer in the whole week. I'm not going to kick a dead horse on this because we opened with it, but the number 2 best performer is software at 10% or 2% a day, bucking that trend and then some. Number 3, let's go right to the source, or not the source, but another enjoyer of the gains. SOXX, Semiconductors. This is the field, not just NVIDIA heavy, straight up concentration. This is the field. And they've been crushing it, up 2% average a day. Today, 7%. That is insane. These are obviously mega companies, hundreds of millions of dollars. What are we seeing for the SOXX? I wrote before, I think it was more on the SMH, but they obviously moved very, very tightly together. I said it was going to basically bottom the area, the former breakout of the overbought registration here going back to April for around 470 equivalents. And it stepped in right where it had to, similar a la we saw in Korea. And now stocks are going higher. I know some folks were calling for the downfall of semiconductors, et cetera, et cetera. It had an ugly week from the 23rd to the 29th, and now straight through. Love what I'm seeing here in terms of the candle, 534 VWAP. My goodness, it's at 543 right here, high of day as we speak on the SOXX. Now what? Another note, the money flow has been ugly in the last month. But it looks like it could obviously reverse here. Very important sticking point. The Gusto, it holds 530. That's a monthly average, as well as a bit of a longer, medium-term average in terms of velocity smooth. So I like to see what I'm seeing today. This looks like it has another week or so with the overall market bullishness. And this, I'm not calling for all-time highs on this group, similar with Qs, but this looks like it wants to head to around 600 right here, and then I think it's going to be exhausted. That is still a monster 60 points from here. So the trend is still overall higher. I don't think we're going to take out, though, those June 22nd all-time highs for the group. But the chart looks absolutely great in SOXX trades. If you're seeing that many more points, you can do the 600 November calls, sell the August 600s against it. Alternatively, you could sell the this probably doesn't get paid, but the 465 puts for August, and then you buy the 4, whatever the next strike against it is. All right, SOXX, they're gobbling it up this week with South Korean software. And now the top 3 losers of the past 5 days. The biggest loser, volatility, down 5% or 1% a day. Today doing inside of that, down 30 bips. That is a new all-time low in VXX. Volatility goes lower and lower. And the last time this market was genuinely concerned, and I'm doing that as a breakout above a sliding 200-day moving average was VXX's existence above it from March 19th, when we were 2 weeks into the throes of the war. And then when the ceasefire happened on April the 7th there, market said, don't care, long hair, don't care anymore. And then when the new lows in volatility broke at the end of May, I said, we're going higher. That's why we never really got bullish or bearish on these any YouTubes or the Substacks. Even this, with these, when you peak at RSI at 51, you wouldn't buy that stock. The same way I wouldn't buy volatility. Even with this breakout, it couldn't muster a pathetic move much above its 21-day, and then it was over. Look at that. It tried to flirt with a 1-month high, and then you're looking at all-time lows within the same week. So that's absolutely incredible. Banks all-time highs, the market all-time highs, JP Morgan, Apple. Market has nothing to fear. This looks like it is going lower. I'm calling for newer, lower all-time lows for this. I have a 19 handle carved out for VXX, which is insane. I said for a 10% reduction 2 weeks ago and a 3% rip for SPY, and that's exactly what's happening. This looks like it's going to go to a 19 handle. Literally around 19.5 is the target. Trades, I don't like putting trades on volatility. It's more of a backdrop as options get cheaper. So you could essentially buy the 19.5 November puts, and then you sell the August, November, against it. I'm sorry, you sell the August puts against it, the next strike lower. Alternatively, I'm sorry, you would buy those puts. You would sell the 22 calls. That's what I meant. And then you would buy like the 22 halves against it for August. So yeah, VXX is going lower. Next, and we already had this chart, so we'll go right through it. The biggest loser after volatility in the past week, oil. We said that. It's going to be in the penalty box straight up after that Dikembe rejection. Just for a couple more days, it probably wants to be serving as a little bit of a magnet towards that 104. Once it does, I think it's potentially going to be a buy. Straight up looking at the charts, not reading, Besant's diary. And then the third biggest loser is another one, a chart we mentioned. They've been hammering it to utilities. Down 3.5% for utilities is a big move, and it's all over as well into a technical breakdown here. The 200-day moving average is going lower now, albeit by a penny a day, and it had encountered here an almost 2-month low. So not meaningless in utilities. It's having a multiple sigma mover lower today, down 60 bips, which is significant for utilities, hence multi-sigma mover. And it's been the third worst place to be after oil and volatility. Top 3 trades of the past 5 days. If you've been long, South Korea off the mat, software, and semiconductors. Congratulations, you're absolutely crushing in this marketplace. All right, we will see you back Thursday or Friday to recap this crazy week. New all-time highs. Check your portfolio. None of us ever had any more than right now. Invest, keep investing. Peace.